What's going on, YouTube? Welcome back to Alpha Futures channel. I'm here with Planty today. It is Thursday, April 10th. I'm actually over in the UK, so it is afternoon here, but what we're going to be doing for you guys is just talking about CPI pre-release breakdown. So for those of you in the New York session, my usual trading session, still pre-market for you. London session is well underway for a few hours now, but CPI release coming out at 8:30 Eastern time. That's going to be 1:30 here. As it's been crazy few weeks in the market, obviously, CPI coming in on top of that is always a crazy day anyways. So Planty's obviously our expert market analyst here, has way more experience in the markets than me. I've done okay as a trader myself over the last few years, so we're just going to talk about what I would be looking for. And then, of course, Planty's fundamental outlook, and then we'll see, hey, which of these trades worked, if any, and why didn't they work, or why did they work? So yeah, I'll let Planty take it away from here, guys, but thanks for coming back.
Yeah, hi, thanks, Ben. So as always, we try and get you to have a look at the fundamental and technical setups to try and maximize your edge. One or the other could be dominant. They both might be in play. We're here to just see where the market really is. So just a little preview going in. I think you should always know what the market is expecting when you're going in, the expectations, the consensus. And as you can see from my little slide here, CPI preview for the 10th of April. We're dealing with headline, that's everything thrown in, and then the thing that the Fed and investors look at, the core underneath, when you strip out the volatile energy and food components. You need to be aware of what both those look like, and I'll just give you a little sort of idea as to what these numbers this year, right now at this point, are actually looking for. If you look at the previous data and what the forecast is there, the headline is seen dropping from 2.8 to 2.6. Ignoring the month-on-month for the minute, and the core CPI year-on-year 3.1 to 3. So they're both set up to be easier. So the mindset is that things are coming back, and that is due to year-on-year base effects in mainly in the energy markets. We've had some goods inflation short-term with a few worries about the tariffs, how they're going to work out. And for me, this thing to get your heads around, we've got all these headlines, we've got tariffs being shoved into the market. This has all happened at the start of April. This is not going to be in this data particularly, unless it's the nuance from how the consumer people, the retailers, are managing things. And we'll have a look at PPI in it for a very brief period in a moment, because that feeds in to how consumer retail entities think about things. PPI is the inputs to what you're making. Consumer prices is what you're paying on the high street, and that has been a problem in the US. And you'll have seen retail sales numbers. If you've been following those recently, they've been soft, missing expectations to the downside. Consumer surveys, what they call the soft data. People are all over it at the moment. The Michigan survey is having so much impact on both inflation expectations, 1 and 5 year, as well as sentiment surveys through the floor, record lows. So both of those, consumer facing and a week going into this. Clues in the question, consumer prices. So everyone's set up for this to be quite weak and maybe a miss to the downside. So we've got to factor that in when we look at the technicals. The bias is for this number to come in light. Anything other than that is going to be quite spooky in the conditions. The market is telling us that 100+% tariffs on China, when China is the input to quite a lot of American firms, then by definition you'd expect it to perhaps look like it's going to pass straight through. Remember, it's worth listening to other central bankers as well around the world. The super dove on the Bank of England, Dingra, and she was speaking last week, the first one post the tariff announcement, keeps saying, look, in Trump 1.0, it was growth that slowed down. The prices didn't get passed on. And today's data that's already on the tape, haven't got it for you here, but China's deflation, CPI, was actually more negative year on year. So they're actually in deflation. So when all this settles down on the tariffs, there might be a pass-through of the deflation across the globe when everyone is set up for it to be guaranteed inflation. So that's all in the psyche of the big investors, what could potentially happen. I'd just like to quickly touch on PPI. As I've been saying, it's always good to look and prepare before any big data comes out that you're planning to trade on. As I said, PPI and CPI is your profit margin for companies. That's the best way of thinking at it. If you look at those data points, the last 5 months, whatever's come out on the actual, when it comes to the previous, they've all been upgraded. They're all green. If you look on those, so we've had 5 months of sequential upping of the input prices. At some point, that's got to get passed on. You would think otherwise it's a
Right.
profit warning on the other side, which is why all these strategists are worrying about the earnings side of things.
Profitable companies aren't going to start squeezing their margins just to be nice to consumers.
Exactly.
We know that's not true. Otherwise, capitalism wouldn't exist. Right?
Absolutely, you're dead right. Now, as always, I always try to teach people the main component of CPI, and this is why it's not used by the Fed, is the weighting onto shelter rents.
Oh, okay.
So OER, owner's equivalent rent, which is a made-up number for people who own their house to try and estimate what they'd pay as a rent. That is worth it's 40% of the main index, the headline print. And when you strip out food and energy, it becomes 60%. So whenever you look at it, you've got to dive in to the website and find out what shelter said, because that is what's moved it the most. And then if that is kind of in line, then you know that there's a spike to look at, and then you can get into people's heads of what is an investor thinking. Because rent is it's something you need to get out of the way, but it needs to be trending down to get inflation down. Without it, it's not going to happen. So that's the kind of setup. We're set up to be dovish. Market has got a psyche about tariffs that they think it might pass through. When's that going to happen? So we kind of got a very nervous market going into this. Mm-hmm. So is there anything that you've spotted technically, Ben?
Yeah. So let's go over the technicals. I mean, yesterday was crazy, guys. That's when Trump, officially did. We got the fake news at the beginning of the week when it was the 90-day pause on tariffs. That obviously did become official news yesterday. That's why NASDAQ moved. I think we closed like 12% yesterday. ES almost 10%, like 9.5. But that's what we're seeing, this rip up on the 1 hour chart here. I've got NQ open. I actually want to talk about ES first. We are looking at regular trading hours here. Guys, if you look at the bottom right of my screen, you see RTH here. That means regular trading hours. So you see I do have just a long and a short marked up on each one, which one I like better and why. I actually would like the ES long better because, guys, these unpredictable events, in my opinion, CPI, PPI, any sort of data release, I will sure hold through. Sometimes if I'm already in a trade, I do not like using it for my executions at all, though. Just because of the volatility, it's supposed to be unpredictable. Some people claim it's even supposed to take you out of your positions. There might be
the volatility.
Yeah, but, there might be some truth to that, depending on what levels of liquidity we're at and everything. Overall, I think it's just you're grabbing a burner on the hot stove. I did that early in my trading career. I don't do it again. I don't see a reason for it, but it's great to still understand which way the market's going to move. And obviously, Planty just went over the fundamental outlook. That's still important for traders to understand, even if you're just trading technical. So from the technical side, though, why I like the ES long in particular, you guys can see we do have a RTH gap left here from when we moved down the beginning of April, the first 2 days, that we did not fill. So for me, if I was looking long ES today, it would be to fill this RTH level back to 56.25 area with the kind of all-out point, like if we get far enough, would be the 5,700 level. You can just see where this major hourly wick is. That, for me, would be what I'm looking for on the upside. So that's the long that if there are people looking long coming into CPI today, it would be something like this. And we are actually gapping down almost 2% this morning. So I do think the ES long is a decent look there, just because that would put us up around, let's say, 3 or 4% on the day if we did make a move back into this gap fill and a little bit more, which we just saw. We closed up 9% yesterday. A 3 or 4% move on ES is not surprising, right? So that's what I would kind of think for the long. But let's look at NQ here, which I do honestly like the NQ short better than the ES long. And same thing, you guys can actually see those two RTH gaps were filled yesterday. That's why I like the NQ long, or NQ short, excuse me. And I don't like the NQ long here is because I don't feel like I have as many price targets to work off of with NQ long.
I think that the fundamentals on the basis that NASDAQ's so exposed to the China-exposed stocks, that's a kind of knee-jerk jump, isn't it?
Yeah.
China's got worse rather than better. So
Right. So that's it. If I were to take one of the trades here together, it would be the NQ short personally. But we are already gapping down. We can see here 2.3% on NQ. So that entry might be a little tough, which now I'm going to jump into extended trading hours, which is going to show us how the market's actually moving now. But guys, that's where my ideas come from is, first of all, what kind of targets do we have? NASDAQ, for me, would only be back to this 20,000 level, which doesn't leave a lot of meat on the bone, right, for a long. That's why I don't love the NQ long here. I don't think I have as many price targets that I'd be willing to play with a even remotely okay stop loss is why, for me, I wouldn't be looking long on NQ personally. If I were to take long, it would be the ES long. Short, though, would be the NQ short, guys, because we have already filled both of these RTH gaps. So that shows us we filled those imbalances in the market yesterday as far as RTH hours go. Now let's see how they react now that they've just kind of filled those imbalances. Do we head right back down CPI? But let's take a look at the extended hours so you guys can see how far we've already moved already. So you can see this is a decent pullback already. Not surprised to see we bounced off of just the kind of hourly higher low yesterday from the amazing rip up we had. But you guys can see if we kind of test back into this gap during CPI, I think the short opportunity is completely valid here to move back towards lows. Just entry would need to be somewhere a little bit higher for me. And let's hop over to ES for that possible long idea we talked about. So ES entry would need to be pretty much any sort of wick we get during CPI is what I'd be looking for. Plenty. So let's say it ends up wicking something like this and gives me a stop loss to play with in the RTH gap we filled yesterday. And again, my long targets would be back to filling the unfilled RTH gap with, again, the extreme target for me being up to 5,700. This would kind of be like the all-out, I'm getting greedy if we go any higher. That's kind of what I'd be looking for both directions. So if you said right now, said you can only pick one, I would say the NQ short personally, because if we do get a long move, that ES long is valid here as well, in my opinion.
So what was the daily position on ES so far? Are we up? Are we down?
We are down 2.02% here. You can see, guys, settlement price right around here from yesterday. We're down about 2%. So again, we're looking at, this would be a 6% move to the upside. Again, probably close the day somewhere around 3 or 4% up. Not unachievable in this market at all.
No,
right now.
as you can see from my VIX chart, we've had some real extremities. We've been up to 60. We're currently at 37. I deal with this rule of 16 that I've explained before, which is an annualized volatility taken down to a daily vol. You divide by the square root of 256. It's 16. And so whatever your VIX is, divide it by 16 and you know how many percent to expect up and down. So we're currently trading at...
Right at 3.
Close to 3. We've
sort of
that's come back to 2 and a bit. So we're in line with the daily range at the moment.
Right, like this move up of 6% would put us around just underneath 4% on the day, right?
So,
or just over, excuse me.
As you can say, it's an extreme on the chart, and it is extreme moves. We're getting 60 is basically 4.5%, isn't it?
Right.
And 60 or 3.5% per day.
And we just hit that yesterday. So
it's crazy.
Yeah, I don't think that target is out of reach. Like I do think that, right, we know RTH gaps don't fill 100% of the time, but they are high probability setup. That's why I would like the ES long, is just because you have a high probability target there. And then, like I said, the 5,700 level for me would be like, okay, I'm letting greed get the best of me. No reason to keep holding this position. So, yeah, that's what I would be looking for, guys. Again, if you had to tell me to choose one right now, personally, it would be the NQ short. But we went over the technical setup in my eyes for both a long or a short opportunity.
Okay, we're only a couple of minutes away, so we'll keep an eye on the calendar. Just another thing I'd like to say is when you get through all the data and you've got a chance to have a little look, always do the calculation yourself for the monthly move. So you'll get the, just looking at this investment calendar here, you'll see CPI index, and you've got 319.08, they're expecting 320. Just do whatever number comes out divided by 319.08, and that will tell you roughly whether it's a rounding up or a rounding down, because often the market overreacts relative to that rounding. So we always like to see what that is.
I'll go down to the 15-minute just so we can... I had the hourly open there, guys. That is where I do most of my analysis, is the 1 hour time frame. It's my favorite time frame personally. But let's see on the 15, we'll see how things react.
Yeah, I think it's about as short as you can go, really, without it being a bit of a coin flip, isn't it?
Yeah. For me, actually, a lot of stop losses and stuff will be on 5-minute wicks.
Yeah.
But hourly is what, if you were to come into my office and be like, let's see what 4 charts Ben has open, it would be for different indexes, all the 1 hour time frame.
So if you want to dive into fundamentals before you dive into your trade, bls.gov is the website, and you go through the economic news release at the top, and you'll choose your inflation and prices, and when that hits, it's going to be there, consumer price index, and you get all the data and the charts, and we'll try and quickly get to the little bits that are moving for you.
We got about a minute here, right?
Yeah, you got about a minute. I mean, you get a summary of everything, and they try and tell you. Often it's better going straight to the actual table, because then you can see it. But remember, you're looking for shelter. Try and rule that out as being the thing that's moving it. And then where are the other things?
Here we go.
So it's come in really light there, isn't it? 2.8. for the core month-to-month versus 3% expectations. This is a bullish print straight away. CPI headline is actually down month-on-month. So that's, remember the energy and food effects there. But that sounds like maybe this eggs problem's going away. We'll have a look in a minute. CPI year-on-year, that's a beat as well. Positive beat, dovishly, 2.4%. So you're looking for a little bit of relief here, but it all depends where those factors are. If you want to have a look how the markets are reacting, I'll look through the chart, Ben.
Yep. So ES. Again, initial move up here, guys. Again, I'd be looking for some sort of wick for would have been entry there. You can see the long is starting to try to play here. I didn't really get a wick lower for an entry. It would have just been enter at the news and see what kind of move we get to continue with here. But again, that upside would be the RTH gap fill. We'll see what we do.
So I'll jump in quickly. Straight away, you go to Shelter, and the March print is a spot 2. As you can see, just looking at that line for Shelter, it's towards the bottom of the table. They've been 0.3s, 0.4s, depending on which 2 data sets are used. It's been a problem. We've been waiting for that to break. The Fed are explicitly waiting for that to break. That's the lowest print we've had for 6 months plus. So that is a positive read-through just from that heavyweight component. Where else have we got issues? So commodities, less food, they're down. Used car and trucks, that has been a big problem for the index itself. That's actually a deflationary month-on-month print, minus 0.7. Medicare, these actually are good prints. Medicare feeds directly into PPI, which feeds into PCE for the Fed. So they'll be very positive there. And we're looking for any chinks. For the Fed are explicitly saying they're not moving because they're worried about inflation. This today is going to throw a real spanner in the works for Fed. I imagine, and we'll have a look in a minute, June's rate cut will be 100% probably today, or certainly May approaching that.
Moving up, like we originally talked about, guys, didn't get the, like I said, I would have been looking for some sort of wick down or something to identify where the stop loss is. But you can see, right, if we were to just take long, the ES long we talked about, it would be moving our direction here. Just taking it right before news, right? Let's even say you just took it and set stops below. Obviously, ridiculous RR if we do that, but not realistic execution to expect of ourselves. But we are moving up here, guys. Again, did start the morning about a 2% gap down going into New York. We're still down about 1.5%. So no major move or anything here yet. Again, would be looking for this RTH gap fill. That's what this purple box is overhead. That's if I were long here, guys. That's what I would be trying to hold for. But
I think the whole problem is we've had a 10% jump.
I know.
We're trying to consolidate in that, aren't
right.
we? This is take everything away, just a bit like what the companies are saying in their commentaries. Things are running okay if we can get rid of the tariff situation. This is a really positive, dovish print for the market. Particularly if you look in the commentary, the things that went down, airline fares, motor vehicle insurance, we've mentioned used cars, etc. Airline fares and motor vehicle insurance have been, alongside Shelter, the sticky bits that wouldn't move. This will get rid of the hawks have got little ammunition left for the argument, other than what's going to happen with the tariffs.
Yeah.
You know, so this will make the next Fed meeting. Was it May the 7th? I think that's going to make it interesting because a lot of them have come out saying we're not doing anything. We sat on the fence. Kashkari was really, really hawkish yesterday. I think this could see a bit of commentary roll back this week. Powell can jump over that and say these things I've described as transitory before. They're now rolling off. Trust me on the global tariffs. That's where the argument is.
Yeah. So underwhelming move so far, but like Planty was starting to say there, I mean, when you get a 9 and 10% move on the indexes yesterday, guys, what do we usually see, right? A major trend move, some sort of range move, and then the market continues to trend. So today could be kind of a doji. I mean, it definitely will be an inside day to the downside.
It feels like, isn't it?
We won't get a 10% retrace today. I really don't think so. I mean, the data also says that too. But anyways, like as far as expectations go going into a day, like a 10% up move, we don't expect to be completely retraced tomorrow. No way. But right now, a little bit of an underwhelming move to the upside, but it has moved to the upside with the ES setup, like we talked about. That's what I would have been looking for as a potential setup. Just underwhelming move so far, probably because market's a little exhausted from the move up yesterday.
Well, exactly. And I think, people try and tell you not to trade the news. You don't necessarily have to trade the news. This is something to have in the locker. You now know that a fundamental that everyone's been worried about has had a feature change. You have that. Get that in your journal. Write it down. This is an important moment to have as a counter argument to the sell-offs.
Right. Yeah. I mean, like that data would have told me today, right? Like we already talked about ES long being a possibility and why I liked it better with the RTH gap. That data today would have told me like, okay, I can continue to look long for today into that RTH gap fill. That's what that data would just have told me there.
Yeah.
And again, I don't like executing during news releases and stuff. That's why you guys don't see I'm in a position here, but we just mark stuff up. That's what the data would have been telling me here today is like, no, it is okay to look for that long into the ES RTH gap fill. And, we talked about the possible NQ short setup just because of the insane risk reward there. If we do retrace some of the 10% move up, I would not expect NQ to retrace a 10% move up all today anyways. But retracing, 4% of it, that's still an incredible move to catch. But that data is telling me I'm probably not even getting that downside move today.
So, and automatically, when you're talking about a 10% move followed by a 4% retracement, that's a fib 38 spot 2. That's a classic, really.
Yep.
These things all you can look at them in a number of different ways. We could put on the whole fib retracements and extensions. Try and think of the market in terms of the whole move since the top as well. We've had a 3-wave big move with equal legs on both of the down legs. That's due a consolidation. We've had it now. That's probably a 50% retrace. That is classic for the danger of another bit of downside. So have it in the back of your mind, but that's probably now telling you that we've got a retest of that low, which will hold, in my opinion, because the data is getting better. You've got you've had the Trump Besant put yesterday. The Fed weren't ready. The Fed have now got the ability probably to follow through on the next stage. And that's something that I wanted to talk about earlier, but we ran out of time. I think what's been driving this is the US 10-year. And this is what we've been tweeting. If you're following the Alpha Futures tweets and the various comments we put up, we talked about 4.5 levels suddenly being chatted about in the bond market, rather than them worried about, everyone said Trump was worried about the equity market. He said he wasn't, but they're definitely worried about the bond market. They need to refinance X number of trillions of debt this year, a big number. They want to get this rate down below 4%. They'd achieved it. We were well on the way. And the bond vigilantes and China, particularly own it, have gone, I think we know where the pain point is. And they've shoved it up. Now, I said the Fed will probably come in if we go above 4.5. And actually, it's Trump and Besant that blinked. The retest of that yesterday, where the red arrow is when they brought their announcement out.
Got it.
So we're looking for seeing how this reacts. That is a dovish print, so we may well, and Trump will be doing another little dance and a tweet
Of
somewhere.
course.
There's every chance that is enough what goes on in the tariffs market to get us back towards that 4% level. So keep an eye on that. That is now your guide for the bullish equity play. So it's another confluence that you might not necessarily look at normally.
Yeah.
But what I say, I want your charts, I want your fundamentals, and then this is a combination of fundamentals and charts.
Yeah, I like it.
That isn't necessarily the index that you're going to be playing,
Right.
or even your currency.
And we're already right back to, CPI release print, guys. We're not really doing much.
No, to be honest, that is a problem with just the market setup that we're in.
Overwhelming, yeah.
Everyone. You've had a 10% retrace on not a final solution, just a pause. We don't really know what's going to happen in the next few days, and that's throwing a spanner in the works because everyone's dying to buy it, and they've now got an excuse to. But you're nagging away. You almost only want to be. My advice at the moment is playing extremes,
right,
rather than looking for trades, because within both the setups, as you said yourself, they could easily collapse and trade through it just on the normal volatility of a data release. We've actually not got one.
Yeah, not much there. But like I said, the data, based on everything we just went over, that the ES long, right? Like I said, coming into this, guys, having no information yet, I was like, which trade do I like better? NQ short is just the one I liked better. Now, with the data we've got here today and stuff, looking for this RTH gap fill. This purple box went over at the beginning of the video here. That's what I'd be looking for, some sort of entry today. Now, that might actually be we dip lower and give
We
me
might have a little retest.
gives me the buyer's wick I was originally saying I wanted here or something, like some sort of buyer's wick, something. That's usually what I'm looking for, guys, when it comes to stop losses, is some sort of major wick on the 5-minute, which we don't really have here yet. You can see, we have a little low I could have worked off yesterday's lows.
So classic, would you now go through your 15-minute and hour setups just to see if you're seeing anything there?
Yeah, so the 1 hour setup still remains valid. What we talked about when we joined the video, right? It's still got this RTH gap overhead now. Based on the underwhelming reaction, I might not even get that far today to fill that RTH gap. But back towards the high to at least attempt a move towards this gap fill today still feels incredibly valid to me. But it seems like that CPI print didn't give enough of, right, whether you want to call it liquidity grab, fake out, fake breakout, whatever you want to call it. I don't think this was enough of a reaction to actually grab the buyers and move up. Right. So
I'm automatically thinking the retracement we've had it's a 1, 2, 3. It's a 3-wave.
Mm-hmm.
We're now similarly having that. If I'm going long, obviously just below the current low wick we're having, but I'd also put on a fib extension here for that whole move.
There you go.
Relative to the top that we've had, just as a secondary test, just to know that.
Yeah, and
that might just give us a little bit extra room.
like you can see, we didn't even overthrow this 5-minute higher low from yesterday. We came down and tested. That's not surprising for non-New York hours that we just tested the low, moved back up. That's
support level,
like to me, that's a little easy, right? Long during London session off support. For me, guys, I would have wanted to see CPI like we talked about when we first got on the video. Overthrow it, give me a large wick. We can still look for that intraday, in my opinion. Like overthrow both of these lows, give me a large 5-minute wick, and then maybe I am willing to get long.
Are you any good at putting stuff on here? Can you put on
Let's see.
From the parallel channel? You go,
oh yeah. I thought you wanted fibs or something there.
Yeah, parallel channel down there, and let's do it from the high through the other high, and then bring it through the low.
About here, something like that.
Yeah, I mean roughly through the ultimate low. Yeah. And relative to the support line we're talking at, that to me is an interesting confluence.
About here,
draw a line across. We're going to have a potential break of that.
The overthrow,
and then you come back.
And that's what I mean. That's usually what I'm looking for. We talk about the hourly and the 5-minute. The hourly is where the idea comes from for me, always.
Yeah.
The 5-minute, again, whether you want to call it a fake breakout, liquidity grab.
And this is something to be aware of. With the volatility we've got at the moment, it's only taking one order, a program order, anything, for wider moves relative to your setup than you're expecting. And these are, when they show up as wicks, get excited, isn't it?
Right, and that's what I'm used to. For me, that's just stop loss recognition. A huge wick, cool. That's an opportunity to know where my stop loss needs to go. That's usually it for me. I'm not necessarily looking to get filled in that wick.
That's right.
And be like, oh, you know what I mean? Like, I'm moving markets.
But it definitely identifies sort of zone respect, doesn't it?
Yeah, exactly. And for me, it's just like it's a nice, easy level. Like, if we come back through that wick, it's not doing what I thought it was going to do, right? Because if I see a massive buyer's wick on the 5-minute, I think we're going to move up.
Yeah.
If that gets invalidated, it gets invalidated. That's the point of a stop loss.
This is it.
So,
and you're just trying to narrow down the percentages, aren't you?
Right.
Any hedge in your way, it's not guaranteed to work. And this is a classic, isn't it? For you could play through a mega data release and nothing has happened.
Nothing happened. Yeah, both shorts and longs. I mean, longs could have taken the immediate data release, exited. Shorts could have exited and also won. There wasn't a particular trade set up, guys, that I feel like played out better than the other there.
I mean, I think we're just victim to the market at the moment. We said the tariff thing, the headline roulette, I described it as yesterday, which is literally how it played out, whatever Trump wants to say at any one time. There's obviously a playbook. They've had it in their face. The bond, on the very basis they're trying to issue loads of debt this year, refinance, they are worried about the bond market, so keep that in mind in the background. If that is suddenly stressed, equities will get stressed again, the wrong headline. But other than that, the background is suggesting that,
not so bad.
On a pullback, there's probably a reason to enter here.
Cool. Well, guys, for me, I mean, I'd like to see how this day wraps up. For me, it would be, again, looking to overthrow the overnight low and then look long for that RTH gap. We'll see how it plays out. Of course, could be wrong. That's what I feel like the data told me here today. But, guys, thank you so much for tuning in with us. Planty, thank you so much for the information.
No problem.
Hopefully it wasn't information overload, guys. I know Planty and I could do this for hours because we really enjoy it. Those beginners out there, guys, feel free to ask us questions in the Discord. That's what we're here for. Hit that thumbs up button. Drop us a subscribe, and I will see you soon.